What's happening now is this. A wave of insider stock sales at Broadcom has hit the tape, including a $24.3 million sale by CEO Hock Tan, and the market is watching carefully as investors try to reconcile those moves with the company's massive AI backlog and near-term guidance. This is shocking the market because it raises the classic investor question: are insiders taking routine profits, or is something more nuanced going on? The urgent lead: insiders sold greater than $45 million over the weekend. Yes, really. Today, investors woke to regulatory filings showing Broadcom executives sold shares worth more than $45 million during the first week of the year, and the biggest chunk came from CEO Hock Tan. According to the filings and market summaries, Tan sold 70,000 shares at roughly $347.30 per share, a transaction valued at about $24.31 million. Other senior officers, including the CFO and the chief legal officer, also sold material stakes, bringing the total to the mid-tens of millions. That's a headline that forces you to pause and ask, is this routine financial planning, or is it a signal? Why this matters today: insider selling by itself doesn't prove anything. Executives sell shares for many reasons: taxes, diversification, family needs, qualified trading plans. But the timing and scale, while Broadcom stock sits near all-time highs after an AI-fueled run, makes the moves worth paying attention to. What the filings actually show: the concrete facts. Here are the ironclad, provable facts you can check for yourself. CEO Hock Tan reportedly sold 70,000 shares on January 6th at about $347.30 per share, $24.31m. Multiple other insiders, including Kirsten Spears, CFO, and Mark Brazil, chief legal officer/director, disclosed sales that, combined with Tan's, took the disclosed insider total into the neighborhood of $45.16 million during the week in question. These are Form 4-style transactions that get reported to the SEC and then picked up by market data services. You can verify the numbers on any financial newswire or the SEC's Edgar system. Okay, so should you freak out? Short answer: not yet, but you should be alert. You do not need to liquidate your entire position immediately. Insider sales are common, especially after a monster run, and executives are allowed to sell under prearranged trading plans, 10b5-1 plans, designed to avoid accusations of trading on non-public information. Many times, these sales are boring or personal: taxes, mortgages, daycare bills, yachts, kidding, charitable donations, etc. But do treat them as a timely flag. This is not proof of wrongdoing, but it is a reason to re-examine your assumptions. When the people closest to the company start reducing exposure, it becomes at least worth a checklist. What do the numbers say? What's the business doing? When's the next major report? These are the exact questions investors are looking for today. By the way, if you are getting some benefit from this content so far and want more like this, like the video, it means much to us, and hit the subscribe button and comment the word more. Just go ahead and type the word more, so I know. Now that you have commented, let's continue. The counterpoint: the AI thesis is still intact. Remember the $73 billion backlog. Here's the other side of the story you must keep in front of your eyes. Broadcom has a massive AI backlog and big partnerships that keep the long-term growth thesis intact. Management disclosed an AI backlog of around $73 billion, and that backlog is scheduled to be fulfilled over the coming months. That's not smoke. That's contracted future demand that matters for revenue visibility and capital allocation. If Broadcom's backlog is a grocery list, it's not a wish list. It's a pallet of ordered boxes sitting on the dock waiting to ship. That's a materially different kind of certainty than hoping customers will buy next quarter. The OpenAI deal updated and relevant. Why this adds weight to the growth story? This isn't just hopeful PR. Broadcom announced a strategic collaboration with OpenAI in October 2025 to design and deploy 10 gigawatts of custom AI accelerators, a mammoth multi-year project that directly ties Broadcom to one of the fastest-growing sources of AI compute demand. That deal and Broadcom's role providing accelerators and networking underpins the narrative that the company is a core part of hyperscaler infrastructure build-outs. Put another way, Broadcom is not trying to be every company's GPU vendor, it's selling the specialized plumbing and custom accelerators the largest AI users need to run at hyperscale. Those customers tend to sign multi-year deals. That's what the OpenAI collaboration signals. What investors are looking for in the coming weeks, your checklist. Today, investors are scanning 3 categories of information like hawks: earnings and guidance. Broadcom's next quarterly report, estimated early March 2026, will be dissected for AI revenue growth, backlog conversion cadence, and margin commentary. If the company converts backlog to revenue smoothly and sustains or grows operating income in dollars, the market may shrug off insider sales. Insider context: are these trades part of prearranged 10b5-1 plans? Are executives selling a fixed schedule? Or were these discretionary sales triggered by some internal concern? The SEC filings sometimes include the 10b5-1 language. Check those forms. Customer and backlog color. Do major hyperscalers publicly reaffirm their commitments? Will Broadcom quantify how much of the backlog is tied to named customers versus multi-customer orders? More specificity reduces uncertainty. Those 3 things, earnings, insider plan context, and customer/backlog detail, will tell you whether the market's caution is overreaction or prescience, why insiders often sell after big rallies, and why timing matters. Think of insider selling like your neighbor cashing out at a block party after a big bake sale. The cake did great, so now they're swapping some slices for cash to pay a mortgage or rebalance. Executives hold most of their net worth in company stock. That's risky. Selling is a legitimate, rational way to reduce concentrated exposure. But if insiders sell right before negative surprises, the press notices. If they sell right after huge rallies when the stock is near 1-year highs, the optics are poor and short-term traders will interpret it as a potential sign of peaking sentiment. The difference between personal diversification and foreshadowing is subtle and requires context, hence the frenzied parsing you're seeing in headlines today. Note this as well. Revelation 14 verses 7-8 tells us that, "Fear God and give glory to him, for the hour of his judgment is come, and worship him that made heaven and earth and the sea and the fountains of waters." And there followed another angel, saying, "Babylon is fallen, that great city, because she made all nations drink of the wine of the wrath of her fornication. I implore you to fear God and obey his law, for the time is near and judgment is near. Worship the true God, the creator of heaven and earth." Want more information about the book of Revelation? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more information and insights. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's protection and care. With God, all things are possible. Luke 1 verse 37.